Welcome, welcome, welcome.
Thank you.
If you want to grab, there's some more seats up front here. We tried to pull everyone a little closer. I got a lot of people commenting that they didn't want to be so far back. Plus, we don't want you to hide back there at all. All right, so welcome to I think our sixth event. It's growing. The type of people that are coming, it's becoming more sophisticated, and we're getting a lot of people that want to hear speeches. So what we've been trying to do is sort of give you a little bit of a taste of various things, and the people that are coming, really understand the basics by now. And if you don't worry. This one will present some concepts that actually I think most of the people know a little bit about crypto here today. I recognize people from last couple of times. Anyway, so last night we've been speaking a lot in the world of crypto. So everyone's getting tired of hearing my voice. So Heather Kavanaugh in my office, who has been researching a tremendous amount on the Securities and Exchange Commission, the current regulations, how it affects crypto, and how it affects people in almost every area. And compliance is becoming one of the key factors in all of this. And we're fortunate to have Heather here tonight to speak to us about this because she really gets it. And it's a very rare thing to have somebody this knowledgeable in the space as it relates to the regulation. So also, ironically, we have Nathan here who will be speaking about the history and why we got to this point and sort of why we shouldn't have had regulations. So they were battling back and forth, at least mentally, as to who would go first, because the one person gets the benefit of hearing the other. But it's not an argument, it's different perspectives as it relates to this. So that being said, again, our policies here, feel free to get up and down, leave, come back, use the washroom or eat all our pizza. But at this point in time, Heather, if you come up and talk a little bit about SEC.
Hi, how are you? What happened to the PowerPoint?
Yeah, all you do is hit
We can't hear you in the back.
all you do is,
You'll be able to hear me, believe me, Dennis. There you go. Okay.
I just hit this. Yeah.
Perfect. Okay. So, what the first slide showed that you couldn't see because I did it in black and didn't realize that on the big screen black wasn't going to show up on that at all, was we're talking about the SEC and regulations, potential regulations, how all this may be affecting the space. It's all happening literally on a daily basis. So how it's going to affect the space changes literally on a daily basis. But we're starting to get a feel for where it's going. So what we're going to talk about tonight is what's the SEC trying to accomplish, where are they going with this. The Howey test, that's what determines if a coin is a utility or a security. That's where you know if you've got to deal with the SEC or not. How do the current securities laws fit into the crypto space? Basically, let's face it, the government doesn't want to do any more work than they have to. They have existing securities laws. If they can cram this new technology into the existing laws, that's what they're going to do. They're not going to write new laws if they don't have to. So looking at the laws as they currently stand is what we want to do and figure out, okay, how are they going to try and fit this new idea into this space? Initial coin offerings in the SEC, there has been action on that. Exchanges in the SEC, they've also done action against exchanges. We'll look at just a quick look at what SEC enforcement actions have moved forward thus far, and then different states. In addition to the SEC, each state is, some are crypto friendly, some are not crypto friendly. There are places you do not want to do an ICO. There are places that if you're a resident of, buying crypto is not easy. If you're somebody in Texas, you're having a hard time buying crypto nowadays. So that is what we will cover. Ask questions, please, anywhere along the line. So the SEC is keeping a close eye on things. They have put out a cyber division that is specifically looking at crypto. They're looking at the exchanges. They are looking at people who are trading. They are looking at people who are putting out ICOs. They've got an eye on all of it. Their main focus is investor protection, and they want to make sure the markets are fair. So when they're looking at the ICOs, they're looking to make sure that nobody's trying to give grandma and grandpa a raw deal and take all their money. When they're looking at the exchanges, they're looking to say, hey, wait a minute, there's no guidelines setting up this exchange. how do I know that you're not favoring some trades over other trades, that you're not allowing that guy to trade at a better price than that guy, or you're not slowing down that trade and speeding up that other trade? They can do whatever they want. They're unregulated right now. So the exchanges have a lot of flexibility, let's say. The SEC has taken its time. They want to see how this progresses. So they're looking at what's happening, and then they're adjusting how they respond to what's happening in the space. When we get down to the enforcement later, you'll notice right now they're going after all the low-hanging fruit. Everybody that they have gone after thus far are truly bad actors. They're people who have done just blatant fraud, horrible Ponzi schemes, things that if any sophisticated investor read just a little bit of their white paper, they would say, I am going to be a million miles away from this. I would never invest my money in this. Some of them look pretty legit, so you do have to dig on some of them. But that's why they've kind of been moving slowly. I know Canada has moved a little more quickly. Some of the other countries have moved a little more quickly. The U.S. has taken a little slower, but I think they're going to get there. We'll talk about the Howey test. We'll talk about the Dow report. That's the report that the SEC originally put out when they first started talking about these ICOs being securities. Regardless of what a white paper says, every white paper, not every white paper, but an awful lot of white papers you read say, this is a utility token, this is a utility token, this is a utility token. And oh, by the way, if you invest in it, you're going to get a return on your investment of this much. That's a security, folks. It's not a utility token. So even if it says it's a utility token throughout the white paper, look and see what the coin actually does, because most of them are securities. In fact, the SEC chair said everyone he has seen thus far is a security. Bitcoin is not a security. Bitcoin is a true utility token. The only way you can get Bitcoin is by mining it. There was no initial coin offering. There was no founder who had 20,000 of them that he started selling. So Bitcoin, they've agreed, is a utility token. Ethereum, at one point, the SEC chair said was a utility token, but then he said any token that had an ICO is actually a security, and Ethereum had an ICO. So everybody's kind of waiting to see what he decides, how he clarifies those statements. Every word matters to the SEC. In every single one of the complaints that have been filed thus far, or the cease and desist orders, they have been hung on their own words. There have been direct quotes from their white paper where the SEC or whatever state securities board said, you said this, it is not true. You said this, that is illegal. So they're literally hanging people with their own words. So what you write in those white papers, or what you read in those white papers, you need to make sure it's correct, because a lot of times it isn't, and that's what the SEC is getting them on. They're not getting them on technicalities, they're getting them on their own words. Crypto exchanges are very prone to fraud and manipulation. That is what the SEC has stated. That's why they're looking at those, because as I said, there is no regulation. They can trade however they want to trade. They can give preference to whomever they want to give preference to. So that's something they're looking at. Don't be afraid to embrace the SEC. I know regulation bad, but it's going to, in this case, it's going to help this space. It really is. We need a little bit of regulation to kind of get the Wild West a little bit calmer. We need, it's going to bring good money into the space, because there's a lot of people who are still sitting on the sidelines that say, oh, cryptocurrency, that's for drug dealers, that's for illegal activity, that's for people who aren't really on the up and up. So you got a lot of people who are sitting on the sidelines waiting to see what happens. I really think that once we get some regulation and people feel more secure, and they don't mind going on an exchange and giving them all their banking information and all their personal information and uploading copies of their driver's license, you got to have an awful lot of faith in that exchange to be typing in the last 4 digits of your social security number and all the other stuff you have to do. I think people will be more comfortable with that, and it will be embraced by the population at large, which is what everybody's going for. That's what we'd all like to see. So the Howey test, 4 simple rules to the Howey test. And this is basically how they determine if anything is a security. Is it an investment of money? Do I have to put money into it in order to deal with it? Is there an expectation that I'm going to get profits on my money? If I give you 20 bucks, are you telling me that in 6 months I'm going to get 30 bucks back? is the investment of money in a common enterprise. Are there 20 of us who are all investing in the same thing, and we're all going to expect the same return on our investment? And does the profit come from the efforts of somebody other than me? You know, if I put 20 bucks into my own business, I work my tail off, and I get 30 bucks back, that's not an investment. Well, at least not an investment in or a security. It's an investment in myself, but it's not an investment in somebody else. If I give somebody else 20 bucks, and they do all the work, and I just sit back and then collect the 30 bucks at the end of the month, well then I'm getting my money from the efforts of a third party. Anytime that happens, it's a security. So any coin where what you're getting back is from the efforts of somebody besides yourself, you're pretty much in security land. The Dow report is basically the report that the SEC originally put out that said, these coins are securities. They looked at it and said, we're looking at this coin meets all the criteria of the Howey test. And there's a couple of rules that they are breaking. One, you can't sell a security unless you're licensed to sell a security. You can't do it. You can't sell a security unless it's registered, or you qualify for one of the exemptions. If you do sell a security, whether it's an exemption or officially registered, it has to be accompanied by a full and fair disclosure. You gotta let people know who the founders of your company are. You gotta give audited financial statements. You have to give your investors a clear picture of what they're investing in, and an accurate picture of what they're investing in. All securities must be registered, and all exchanges must be registered. So if you're an exchange and you're dealing these unregistered securities, you're also an unregistered exchange dealing unregistered securities. So you're breaking two laws. So there's a lot going into it. And any company selling the securities has to be licensed as a registered broker-dealer. You have to have your broker-dealer license. It's just like if you're trading stocks. It's a security. So ICOs, that's the first place that we see a lot of involvement from the SEC. An ICO, I think you guys are all familiar with it, is just a new way to raise funds. It's where the early backers exchange legal tender, usually Bitcoin. They get whatever the coin that is being created by the ICO, and they then hope to sell that on the secondary market somewhere down the line for a profit. The SEC chair, in his statement to Congress on February 6th, said all ICOs he's seen thus far are securities. Nothing he has seen does not qualify as a security. You can qualify for an exemption. You can register your ICO and legally be registered. There are Reg D, Reg CF, which is crowdfunding, and Reg A+. As of today's date, nobody has done that. There is not one single ICO that has registered. There is one, Praetorian, that filed. So they are the first one that has given it a shot. Their filing went into the SEC on March 6th. We'll see if they get approved or not. If they do, you can bet the SEC is going to publicize the bejesus out of that and point to every other ICO and say, look, they did it, you can do it too. Do exactly the same thing they did. They're legal, they followed the rules. So it'll be curious to see. Telegram and Kodak, which you might have heard of, they both used what's called the 506C exemption, which limits you to accredited investors. So that's fine for an initial raise kind of thing, but you can't really trade on the secondary market. You can't. It restricts the transferability of the assets. So not ideal. Hello. There we go. Exchanges. That is the other place that is going to get hit with regulations. So many of the U.S.-based exchanges, the exchanges found here in the U.S., have elected to be regulated as money transmission services. And so far, many of the states have been okay with them just doing that. They haven't hit them for dealing securities yet. However, again, the SEC chair said they're probably operating on regulated exchanges. They issued about 80 subpoenas 3 weeks ago now. Exchanges are one of the places that those subpoenas went. So what are they looking for? I don't know. I haven't seen a copy of one of the subpoenas yet. I heard third hand, but I don't know that I trust third hand. So until I actually see a copy of one of the subpoenas, I'm not going to say what I think is in it. But they did. They put out a lot of subpoenas, so they're clearly getting more serious about looking into it. There are exchanges that aren't allowing U.S. citizens anymore because they see this coming. Bitfinex recently closed. November 7th, I think, was the last day that any U.S. citizen could trade coins on Bitfinex. You had to have everything off by then. They were shut down. Poloniex, which was recently purchased by Circle, actually went to the SEC. So they are the first exchange. So we've got one ICO that's gone to the SEC. We now have one exchange that's gone to the SEC. They went to them before the purchase was finalized. Circle went to them, said, we're talking about buying this exchange. It is not registered. We have not done any of this. And the quote from the Poloniex people are, the SEC was very favorable to the approach. They said that we were the first company to approach them, and they were going to work with us on it. That seems to be the general take. Anytime any of these ICOs or any of these exchanges or anybody goes to the SEC, right now the SEC is in a very friendly mood in terms of, we'd like to help you be compliant. We will work with you to get compliant. I don't know how long that's going to last, but at least for right now, they seem to be in a, let's help you get to the right place so we can then point to you when we are talking to other ICOs that aren't doing it right and say, look, you can do it. It's not that hard to do this correctly. Okay. So, looking ahead, what I think is going to happen, we'll see what really happens, but what I think is going to happen, I truly believe that they just want ICOs to register with the SEC, or more likely to qualify for one of the exemptions. Registration is a pain. It takes forever. It's incredibly expensive. There are major reporting requirements. Most of these ICOs should be able to qualify for one of the exemptions. I think that's what most of them are going to do. I think there's going to be an A+. That's the most generous of the exemptions that allows the most people, you don't need accredited investors. The securities are completely tradable. It really gives you full access to do everything you want to do. So I think I think that's what they're aiming for. You have to have a licensed broker-dealer assist you with the sale. That's easy to do. There's lots of broker-dealers out there. I'm sure they would love to get into this space. Some of them already are in this space. So team up with a broker-dealer and then you're good. And follow your AML KYC requirements. That's one of the biggest ones. Compliance is going to be huge, because the one thing they're still looking at is money laundering, and they're looking at terrorist funding. They got to know who you are. You can't be investing $100,000 in an ICO with those ICO people not knowing who you are. So if you are opening an ICO and you got somebody saying, here's 100 grand, you better know everything there is to know about that person and where that money came from, because otherwise you're the one on the hook. So that's going to be important. With the exchanges, same thing. They just want them registered. So you can register with the SEC. You register as what's called an alternative trading system. There are lots of alternative trading systems. Lots of the big brokerage firms already have them. Morgan Stanley has a bunch of those already have them. Same thing. So you register with the SEC as an alternative trading system. You register with the Financial Institutions Authority as a broker-dealer. And you become a member of what's called an SRO, which is a self-regulatory organization, because as an alternative trading system, you don't have to follow the regulations that a normal exchange would have to follow. So they want you to join one of these organizations that then sets forth some regulations, but they're self-regulated. So if a bunch of the exchanges get together, form their own SRO that the SEC approves, then there you go. That's, again, not terribly hard to do. I don't think it's an unreasonable ask, and again, I think it's going to bring a lot of clarity to the space. I think it's going to bring a lot of confidence that the space is legitimate, and that'll then bring more money into the space and more people into the space. Okay, quick talk about enforcement actions. As I said, in every case, they are going after the low-hanging fruit. These are bad mamba-jambas. They did really. So Arise Bank claimed that all of your investments were FDIC insured because they were partnered with a bank. That was not true. They also claimed that they were partnered with Visa and MasterCard. That was not true. They also claimed they have an awful lot of legal assistance from an awful lot of really high-powered attorneys. That was not true either. So they raised a lot of money, on a lot of untrue statements, and so they got hit with fraud, they got hit with running an unlicensed or issuing securities.